subscribe now and press the bell icon. Never miss an update.
Let's finish this qualifying widower thing, then we'll continue tomorrow. Okay, so tomorrow we'll start with head of household status. Okay, so let's just start with that. So this is, as I was saying, this is a special status given only to the surviving spouse for next 2 years if the surviving spouse does not remarry. So as the name itself suggests, the person, the surviving spouse is a widow or a widower, and for next 2 years, she or he can claim this status. But if the spouse marries again, then obviously they'll have to go with married status, either married filing jointly or separately. Another condition is that in the year of the death of the spouse, we have to see were they eligible to go with married filing joint status. If that is the scene, then the qualifying widower status can be given. Again, this third condition that the surviving spouse is maintaining the household for the taxable year. That means the household maintenance means the spouse furnishes more than 50% of the cost to maintain the house. And that house must be the principal place of abode for the dependent. So this status, qualifying widower status, it gives benefits to claim dependents. It gives higher standard deductions and all. So that's why they're putting all those conditions that the surviving spouse must be if all those conditions are satisfied, that means there needs to be some relief given to the surviving spouse, and this status they can avail this status for the next 2 years only. They cannot, even if the person does not remarry, all other conditions are as it is, that the surviving spouse is taking care of household expense and all, and there are dependents living in the same house, that it doesn't matter. This status can be given only for 2 years following the year of death of a spouse. Okay, and then this, who are the dependents? Who are considered to be dependents when we are talking about that the household maintenance need to be incurred by the surviving spouse, and the dependents' expenses also. The dependents can be son, daughter, stepson, adopted child, whatever, but it does not include foster child. And I was saying that this is an exception. Generally, dependents would also include foster child. Okay, but just for this status, they are making this as an exception. The surviving spouse can file a joint return in the tax year of the death of the spouse. So in that particular year, when the spouse has died, for that year, they can still go with married filing joint status. For next 2 years, he or she can go for qualifying widower status. Okay, so we'll just close it over here because head of household is a big category. We'll need at least 15 to 20 minutes to go over that. Okay, what we can do is we can just cover up single status. An individual, obviously, if the person is unmarried and all, and there's no other person who is a dependent on single status, then they can go with single. On the single person. So if the person is single and he or she is having some qualifying dependents, like the parents must be taking care of parents, or must be some other relatives, those are staying with him or her and they're taking care of him, then they can go with head of household status. Because there is more than one person in the household. So that's why we're saying it, that this is head of household. And whosoever is considered to be head, that person has to maintain the household. Maintaining meaning paying more than 50% of the total household cost. Okay. The other status which is remaining is head of household. We'll go over that tomorrow. We can quickly cover the standard deduction part. Standard deduction on 1040, that's again very important. That 2 kinds of deduction one can claim, either standard deduction or itemized deduction. Standard deduction, as the name says, there is specific amount of deduction given by IRS for each different status. So for married filing jointly, there will be one amount which will be given as a deduction. For married filing separately, there will be another amount. And the highest deduction one can get is for married filing jointly status. There are like, I mean, obviously it looks like IRS wants to encourage married filing jointly status. Plus there are two people income. If both of them are working, both their income are being clubbed on one tax return. So obviously they'll go into higher tax slab, and the IRS will encourage married filing jointly status. So obviously this will encourage married filing jointly status.
Hello, ma'am.